Hello traders, hello everyone here at Trading View. It's been some time since I recorded video analysis here for our community, so I think it's always to bring you this content in video format because it's much easier for me to say so much stuff in a relatively shorter time. So before I go to some analysis, I want to look at some of the Elliott wave um, principle, just in general, what Elliott waves means and how we can identify the patterns. So what we are looking at here is just a simple basic 8 wave Elliott wave patterns where you have 5 waves in direction of the trend and you have a 3 wave setback. And this is very important because whenever you can identify the pullbacks within uptrend, well, that's when opportunities can show up, right? So for me, what's very important, the most important is that you are able to identify the uptrend. And once you identify the uptrend on a higher time frame chart, and then you see some consolidation, well, you go on a smaller time frame chart. And then if on the smaller time frame charts, you see some slow price action, like a pause within uptrend, well, that's where opportunities could show up. And ideally, this will be wave two or wave four within uptrend. So we certainly want to wait on some consolidation phase before we can take actions on the upside. And these kind of a patterns, as you know, can occur in any kind of degree trends. If you are more investor, you will focus maybe on higher time frame charts. If you are trader holding trades from a few days to a few weeks or a few months, then maybe you will scale down to the smaller time frame charts. So the idea is that we have to look for this kind of a retracement, which could offer some opportunities. And I really like to pay attention to wave four because wave four it's much easier to recognize because behind you have usually very strong sharp moves like a wave three. And whenever that's the case, well, you may want to experience potential opportunities in uptrends here in these impulsive segments because the fifth wave is then still missing. Sorry. So this is very useful. This is just simple approach. But what we also have to consider is the Fibonacci levels as well. So it's not only the price action, it's also the timing and the retracement in percentages compared to the previous lags. And we know that 38.2%, 50% is something to watch for. Okay. So that's the area where market could stabilize. So this kind of a situation could be just now discovering here on silver. So as you know, silver has been in a very strong uptrend for most of 2025. And interestingly, what happened here at the end of December is that we have seen a very sharp move to the upside, looks like a blow off move, right? Then market turned to the downside. And that's totally normal because that's when we had this Christmas and New Year holidays, so market experienced sharp moves in both directions. And what will usually follow after these blow-off moves and sharp reversal, that market will consolidate. And this consolidation and price action that can move in both sides is very common at the start of the new year because that's when traders, especially in the first week or 2 weeks, are still away, still just watching the market before they do just some position portfolio rebalancing before. So it means that market needs more time usually in the beginning of the year before it may maybe stabilize and continue to the upside. So I think that's now the perfect time for a wave four, and looks like that we could have this wave four either as a triangle, maybe even as a deeper ABC correction here. But in both cases, what is important is that this looks like a healthy pose within uptrend, right? So my favorite idea is that I'm looking for a triangle, an A, B, C, D, E pattern is something to watch for. Also watch that first support line then for a triangle around 70 to 80 then, which was basically some small gap because it was the open at the beginning of the week. week. So we have seen a rally from there into the 78.6%, and we failed. So it looks like that if we will stay choppy here in this range, the triangle could really make sense. But even if we see suddenly some sharp move lower here towards 69 or 67, still fine, maybe even better for potential resumption higher, because a lot of liquidations could happen below that level, especially because today we also have jobs data, right? So these are two yellow boxes that represents potential opportunities from where the market could obviously reverse higher. So if you are maybe more patient trader, it's still Friday. If you want to wait on important figures like jobs data to be behind, then maybe it's better to wait till Monday, Tuesdays, where I would be expecting that market could really start turning to the upside, unless data will force bulls closer to the upper side of the range already today. So these are two levels to watch, and as I said, 38.2%, 61.8% is definitely something that we don't want to see. If market would go that low, it would probably not fit this to be a wave four, at least not of this red wave cycle that I'm currently tracking. So as I said, we are exploring the ideas that we are here in this wave for right now. Also, it's not only um, technical or sentiment analysis that matters. It's also important to keep an eye on other like intermarket analysis. So, what's for us, what's important is if we want to be bullish metals, you want to see dollar that will stay in bearish mode, right? And here we have this overlay chart. I'm comparing dollar index with silver. You can basically see that silver in the bottom started to move aggressively to the upside right at the end of November, when dollar index found this and made this double top. So we have seen some very sharp moves, and you can see that exactly during the New Year and Christmas holidays, when dollar bottomed, well, this market silver started to consolidate. So if I want to expect more upside on silver, it's very important to expect more downside on dollar. So I want to see dollar moving into the resistance. And if we look at the wave structure here of the dollar, well, notice that I can count 5 waves down here. So you have waves 1, 2, 3, 4, 5, followed by ABC rally. So what we are seeing right now is that dollar is moving into some strong resistance up here, meaning that sooner or later we could see markets trying to turn lower. I'm looking specifically at 99.30 to limit the potential upside here. So maybe data will cause a bit more upside, or maybe who knows, after a few hours, even if we get spike higher, the market will reverse. You will very rarely see that jobs data will cause just one-sided move that will be there for for a few days or maybe weeks. Usually any kind of data comes out, it can be reversed later on. Well, positions are readjusted. So watch out for limited upside here, but based on Elliott wave terms, the validation is above 100.40. So as long as we are looking for a reversal to the downside from that box, I'm expecting that silver could resume higher. Traders, thank you very much for your attention. If you like this content, please press a like. Make sure to leave me some comment below that video, and I will try to do my best to provide more of this content in the future. Good luck.